Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got a rejection off that 886 all the way down, held the 706 for a bit, dropped down to the 618 of this diagonal pitch fan we've had price in for over a year. We swept all of these lows. Now are we going to start to make an ascent after a double bottom of some sort at this region, or are we going lower to the 34k liquidity down below? Let's find out by looking at that liquidity. And what is the liquidity? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters got burnt in the last 24 hours. You have even Steven, some longs and shorts getting liquidated, more shorts than longs, 18 million shorts on BTC, 12 million in longs for BTC. You have some longs and shorts getting liquidated on Sol. ETH, more longs than shorts on ETH, and overall liquidation in the last 12 hours. Where's the liquidity as of this moment in time? It's holding this range. They keep sweeping some of this 39 and 40k. They keep sweeping both sides, the 100xers. If you look at a more in-depth report here, looks like it maybe wants to come to that 40,300 region and sweep up some of these 100x high leverage people. The orange is high leverage, or 100xers. So coming up to these to sweep some of these guys up, as they just previously swept up the other guys that we were pointing out to you from last New York Open stream that we streamed not too long ago. What were we saying would happen? Did not come all the way to our point of interest. But what we were saying is it would come and kiss the cloud at some point. We were saying possibly as low as this region, the 786. But coming to the cloud here, what do I mean by cloud? Well, there you go, the cloud. Had you at hello, you came to that cloud and bounced off of the cloud. This is why we have it back tested to a precise degree, so that it tells you where it could potentially bounce, and it did off of the cloud. But we had yet hello with the baseline cross down event, and we were saying it would come down to that zone just about where we said it would at the time. It did. At 5 o'clock it bounced back up. So that was that. Let's go back to the liquidity and take a little bit of a look at the heat map for that. So on the 12-hour heat map, you have some leverage on both ends of the scale, some at 17 million at 39.2, so 18 million up at 40,005. Looks like the next thing on the chopping block is that upside play to 40,005 if it had to be immediate. Looking at the last 24 hours, you also have some up in that 40,005 mark. They previously came down and gobbled up some of those levels that we were talking about down here, and now they're going to potentially grab the ones up top. This is Thursday, January 25th, midweek reversal Thursday. So do we see a bit of a stab to the shorts this time? If we look up at where the shorts are currently, this should have been dark. I don't like the light style here. Let's turn that and that. Okay, so if we look here, as we are coming up, there's some shorts opening. You're seeing some shorts open while the price is not going up, and no interest in longs. The longs are not opening here, so they could squeeze up on the shorts that are opening here into that point there using the open interest stuff. Also, if we turn on the liquidity here and go to a lower time frame, we can also see that for free on here. These are all free resources that you can use to gauge the liquidity. This is an indicator by ML Applications. We were talking previously about why they would sweep down here we were seeing more 100xers piling up here, and they came back and grabbed all of those guys.
Fatality.
And then now, looking like there's some 100x guys up here that they could be coming to squeeze the shorts on and come up to these regions here. So they came back into some of the 100x longs, and they could be coming into the shorts right now and coming up to that 40,500 region up here. The large amount of liquidity up in that region is most nearby the price action as it currently stands. And this concurs on the 3-day. Going to the weekly. Weekly also has a large amount of liquidity up in that 42K region. At some point, we could get a stab up for even a bearish retest to the upside. And on the monthly, you have that large amount of liquidity up at 43,155. You got 320 million up there in shorts looking to get stopped out at one point. Nothing goes down forever, just as nothing goes up forever. So we could go up to stop some of the shorts out. Overall narrative is some bearishness down 2.226 billion down at 34 even. Do we come down and get that large liquidity pool at 34K, which is not that far away at some point? 8 billion if you go to the 6-month time frame, large amount of liquidity down there. Even if we bearishly retest up here and grab some of these billions, like at 43.2, there's 928 million there. Even if we come up to these regions, do we start to make our way back down? That is the question. Time to look at the math, turn off the liquidity. We know where things stand immediately. So let's go ahead and take a look. Shout out to everyone here. What's up? 2 a.m. Wow. Thanks for stopping in, Prehab and Spragadocious. Yo, yo, yo. My fever finally came down. I had like 103 fever. It was weird. It was like as soon as I close my eyes, everything just shuts down. I don't think about anything or do anything. Just time passes. That's it. Not asleep either. Too hot to sleep. It was weird. So looks like we are holding this 786 of the bearish trend base fib level. We did not come down to it looks like we had a shallow. Did we even go to the pocket, or we just went to equilibrium? So we went to the equilibrium level of this impulse here and started to get a bounce off of it. I'm still not necessarily sold on the idea of this coming up for good here. If this comes up to 40,005, which is the 0.65, we still have the trap door here at 40,281 that could basically reject us. So even if we do come up to here, we could come down hard for a double bottom idea. This is looking at the second pillar of trading, which is the math. Whoa, so you did the liquidity, now you got to do the math. And then after that, we do the momentum. So as long as you're respecting this 236 at 42,475, you should be bearish in your outlook, and every pump you should look to fade into a dump. All right, until proven otherwise. And it's been quite a journey. You had this huge dump. I was expecting a little bit higher up to here before we dumped it, and we dumped even higher down. Respecting the 706 level nicely, bounced off of that, came down to the 1 level, bounced off of that, met with resistance at the 0.65, and possibly doing it again if we come up to those regions. The liquidity also suggesting that beyond that point, the high leverage people get knocked out about there. Okay, so let's go ahead and throw on the momentum. Link in the description for more. You can scroll down to features, toggle everything at your leisure at Bitcoin's bottom as a schematic for what to look for those double bottom cloud flip ideas. Trend cloud, the baselines, the stochastic array, and more, your dynamic alerts to your phone and whatnot. So getting that flip of the 12-hour, we were talking about this 12-hour cross up event possibly leading to some upside here. We have seen some fake outs of those cross up events like we did here, which immediately led to a cross down to the downside. So be careful of that. First, let's go to the 3-day. The 3-day was going to close bearish. We were talking about the closure of the 3-day being potentially bearish because of that downplay of the baselines here, so that we've had since December 15th, talking about how that leads to an 18% correction, and so far it has played out to fruition. Also, reminder about the pre-halving retrace, wrecked capital. You can check out this little post about it, about how this leads to prior to the halving. So this is all par for the course. Also, we wicked off of the adaptive moving average here on the 3-day, and the cloud was down here. So this is your standard typical cloud kiss scenario. Are we kissing off of the cloud to get a little bit of a bounce here, or are we going to fade through the cloud down to the super trend at 8.1% away? The 8.1% away is about 36K on the 3-day. The super trend has been pretty flat ever since this whole time of consolidation and turning to the downside. First of all, let's look at the oscillator here too. You had the bearish divergence up at the top there in January 7th on the money flow and the RSI, and now we're getting that suppression of the stochastic takeoff by the Williams oscillator. Coming to the daily. The daily trend was, we were seeing this narrative shift of the cloud starting to shift from 2 o'clock to 3 o'clock, and now it's even going harder to this angle, to the 4 o'clock angle, as the trend starts to shift. So even if you do get this pump up, is it a bearish retest of this cloud at this point on the daily time frame? You have your levels for these bearish narratives to remain bearish at that 42,475 level, and the money flow above the RSI here on the daily, suggesting a little bit more of a dump to the downside at one point. The Williams getting into a pocket here of oversold nature. The last time we saw that was back in September when we had the rocket ships down here. So do we start to see a shift in the narrative structure to take us back up again at one time? The Williams being in this oversold state has not been there in quite some time. The money flow is above the RSI though, and the last time we had something like that, it also led to something where even though we were oversold on the Williams, it did end up bearishly retesting and coming lower. So we very well could come down again before these Williams get clear for takeoff. But getting the Williams in this oversold state is when you start to get to those swing ideas on these higher time frames like the daily. The one thing I need to remind you of is the weekly cross down event that we had. We had a weekly cross that closed in effect here. So we've had the weekly cross down event of the baseline here. So does this lead to the weekly retrace down to some of these levels? That would make sense, coming to those 32K, 33K, coming to these regions on the weekly time frame. All right, so let's go back and go into the 22-hour. The 22-hour has the cross up event locked and loaded, ready to go for a potential upside play. You had previously the money flow hidden bearish up here, hidden bearish divergence on the money flow that was above the RSI, suggesting fatigue here on Monday, and then we dumped down aggressively from that point on the 22. Now getting to a pocket region with the rising sun event, potentially getting ready for a push up in some manner. Going to the 12 hour in the same state, the money flow above the RSI, suggesting there is a struggle at some stage to get this takeoff underway. The MACD, leading MACD, looking to potentially cross on the 12-hour time frame. One thing to note is on a time frame of your choice, most likely the higher time frame is a good one, as you can set an alert, pump or dump on Momentum Master B for the leading MACD cross. It will give you this alert prior to the move when it starts to happen, so it will let you know when these start to cross. For example, the last time the MACD crossed down was over here, back at the top over here. So this would have told you that the 12-hour MACD was bearish back here in Friday, January 12th, and would have just let you know that there's potential of a downside path, which did start to come to fruition. So the same thing could occur on the opposite end of the spectrum if you get notified of that pump and dump idea. We have those alerts set over here indefinitely. We got it on the 5-minute, but I should be putting it on higher time frames as well. Okay, and so the 12-hour cross-up event is potentially underway. Looking at the 6-hour, the 6-hour getting the money flow above beneath the RSI, suggesting that it wants to go up. One thing is that the stochastic is overbought and we have not gone to the top of the range, so getting a flush of the 6-hour time frame could be something underway. We're seeing lackluster volume enter here at this top of the range. Majority was in the dumps as we dumped out of here. And the cloud on the 6-hour still bearish with no signs of abating or turning in a curvature angle. What you want to see if you're going to see a change in narrative structure is you would see this curving and starting to thin, and then you would break above it and retest, and then off to the races. So no sign of abatement yet on the 6-hour. We could be seeing a range play or a double bottom event unfold first. The trapdoor of the 706 is what we look to aim to fade if it is going to drop lower. Okay, and looking at the 4-hour time frame. 4-hour also overbought, but looking to possibly double top with the last burst up to that cloud zone. The cloud on the 4-hour is more curved than the 6 in terms of wanting to show some sort of abatement. If you come up to that region like here and then start to fade off of that cloud, it's one way to steer this cloud in another direction is to poke at it like a balloon. So in order to deflate the cloud, they need to stab at the cloud. Here it only stabbed up into the haze of the open close of that average of the cloud. Same here, we only poked into it and then dumped down. So if we cannot get above this 4-hour cloud, then we are coming lower into this. We only did the equilibrium bounce this time, so going lower seems to be is my personal bias, going into this deep retrace zone. All right, and then that is the 4-hour time frame. You have the money flow coming back to the RSI without really giving you much. So the last stab up would be to come up to that 200 million up in that 40,005 region. Coming to the hourly. The hourly time frame, this is what we were looking at yesterday when we were talking about it coming lower to the cloud kiss idea. We were seeing this curvature. This is what we were talking about. It's all fractal in nature. So you got this curvature starting to flip, get thin. And so we were seeing this cross down event, and we were saying, well, it's got to go back and kiss the cloud to get some confirmation, and it did. And didn't really get so much push up here, and we are in the Asian time frame. Hong Kong generally pump fades it, so we're looking to see if this fades down to the bottom here. You are getting more shorts opening here than longs, and the open interest is going up on the shorts, so they could squeeze into those shorts a little bit up to that 40,005 and stop them out before going lower. Okay, and the 15-minute resetting in a manner here. The Williams alarm saying watch out, we could be coming lower, but the liquidity suggests otherwise. Right now they're just going into some of these 100xers before deciding to go into these stacked short zones. All right, so let's go ahead and look at the broader markets and take a look at Dixie. We had Tesla earnings take a skydive, and we saw the Nasdaq dip yesterday. So the Dixie came down, did not hit the gap region, but did come down in a manner here and then start to rise back up. Let's go ahead and zoom out a little bit. Let's go ahead and turn off the oscillators first. So we came down, recovered the entire push up here, and essentially just going in this sideways range. We have some more news coming, I believe, today. We have some Euro and USD, the unemployment claims today in the pre-market news, that will give some rise to the USD. Basically undecided for where it wants to go. The USD get basically in a sideways range from here. Okay, so they came down for this liquidity grab, did not even come to the gap, and came back up here, suggestive that it wants to go higher. This is also with the rotational shift of the Nasdaq. If we go to the NQ, the NQ was having those earnings reports that were kind of bearish for Tesla. That's what caused the majority of this retrace here. So we had this deviation play up to the 2.5 from the opening drive and rejected off of that. What do I mean by that? Well, on the opening play, so in the opening drive of New York, let's just go back to that really quick. So on the opening play from here, from when we opened, we came back up and retraced, and from this impulse it told you where it wanted to go from this retrace here. This small impulse on 20 minutes, 5, 10, 15, 20 minutes of data in the opening into the London close told you algorithmically it wanted to go up to these regions, and so it came up to those regions. You got the news and then started to dump into that Tesla news. So this is how you can use deviations to your advantage for NQ or anything. So ultimately the 236 at this for the bullish continuation at 17,560. Even if we come down to that, we still could see some continuation. We never came down into those thin print zones that we broke away on, a breakaway gap. So we still could come into these, there's a deviation level up here, we still could be slated to project up into these regions at some point. Okay, so we broke through these points of control down here and repriced up into these regions, so we could be trying to create some sort of structure, some bounce zone into these regions. We also had some nukes, I believe, on Momentum Master last night. So we had some closing on an hourly time frame up here, and we abated at that time. Now coming back to the hourly cloud for the Asian session. Do you come up into this hourly gap and then start to continue on your way down? For NQ. Looking at Bitcoin dominance, the dominance got a large bounce up here, broke out from that region, from that 618 zone. So we were in this golden pocket region for some time, and then we came down to the 66 and started to break out, giving the dominance a bit of a rise here. If the BTC dominance is rising and the USDT dominance came up from this rocket ship all the way to this gap we were looking at, so we came up to the gap. That means that people were getting kicked out into USDT out of their trades. Does the dominance for the USDT dominance want to continue higher is the question. You're getting cross down events of the 4 hour and the 6 hour and the 12 most likely. Not yet on the 12. And seeing this 12-hour cloud shift was what we were looking at when we saw this rocket ship take off from here and go up above the cloud with conviction, and then it started to hold this 382 level here, and then this 382 basically brought it all the way up to here, and then yeah, it was off to the races, knocking people out into their USDT. So are we now back above this range and starting to tap at going back into these balanced price range fair value gaps up in here? So we could come back down again, do that for that 40,500 play, and then start to come back down again. Overall, if you look at the 4 hour, getting a cross down event, so coming to the cloud and kissing the cloud one last time before going down again. And looking at total three breaking out, breaking down here, came down to the 236 of the bullish trend-based fib and got a little bit of a bounce there on the alts, but overall the structure is ugly for upside, complete rounded tops and nukes galore. So the alt rally was over, we were saying, with the curvature here, and we were also seeing that on the 12-hour cloud here with that curvature and that bearish retest and drop. The line in the sand being the $442 billion thing from this impulse retrace idea here, looking to possibly head and shoulders this, even going lower if we do this retrace into the halving theory. Total has this clean structure for the 236 of a bearish nature here, 1.6 trillion coming down to this 706. Does this trap door open up at the 706 here and start to head lower for a double bottom coming down to the 1.4 trillion? So ultimately I'm looking to fade BTC a little bit lower, at least to double bottom idea, test the lows one more time. It was very beautiful how you had this nuke that played out up there on January 11th, showing that the nukes are still got their sauce. All right, so let's go see if you guys have anything to weekly cross down. That'll be a pain. Yeah, you got to be careful about that. If that cascades to the weekly, I mean, it makes sense. This whole, I was reading about this and talking about it since December 15th, really, like the whole pre-halving rally that we had with the ETF. Like the whole bullish news narrative is always something you got to be aware of as being one of those bullish theories that is not really sustainable, and it didn't line up with the halving. So most likely they positioned into their shorts up here, and then now they're just riding it down with their inverse perpetual contracts. What is an inverse perpetual? Well, you use BTC to short BTC, and then you make more BTC on the way down. So they're making BlackRock and all them making their money while people praise BlackRock for taking control with the algo. It's crazy. Why would you want like them taking control of BTC anyway? But so the what we're looking at here doesn't change. Do we get this to pump up to that 6.5 level one more time to sweep some of the shorts here? You're getting some shorts that opened up without the price moving, longs kind of closing out a little bit, so there's possibility of squeezing up into these shorts a little bit, and then dropping back down for a double bottom event. Now if you start to close with conviction above this, then you could be finding yourself in a nice long, but I'm not interested in this structure for a event, even though you have the cross up event on the 4, the 6, the 12. You have these baseline cross up events. Oftentimes you do get a mitigation test, a liquidity grab, which gets bought back and closes above the baselines. So it's possible that that could occur. Like if we go back and back test a little bit here, we'll just do that really quick. So as you were trying to create a structure here, you had a lot of fake outs, right? On the 6 hour even, you had a fake out, fake out, fake out, went up, came back down, and you were in this zone in September. This was 26 days just before we started to make it above the cloud and make it out, but the rocket ship had you at hello. But even then you had like a liquidity grab before you started to come out. So there's nothing to say that this needs to occur overnight for us to get out of this plight that we're in with this range. Like we could come down here and be in this structure for some time. This could give you a little bit of a bounce, but it could be short-lived. If we go back even further in another instance, each one gives you a little bit. So even this, when you're consolidating, you would still get like 4% here. Even this little cross up gave you like 2%. So each little cross up does give you something, but then it can immediately give it back. Ultimately, you want to see that aligning on the higher time frames with the rocket ships and whatnot. This was in June, and I think we had a rocket ship down here too. So let's go see what you guys have to say. Do you have anything? BlackRock riding down. Yeah, it looks like a double bottom, probably fade drop. 100K ETF in dreams. Yeah. Alright, well, I'm gonna bid you adieu. We'll see if this goes down to this region or not. That's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.